Welcome back, everyone. We have an update from Sucro Limited. It trades on the TSXV under the symbol SUG and on the OTCQB under the symbol SUGCF. It is a growth-oriented, highly integrated and interconnected sugar company that operates throughout the Americas with a primary focus on serving the North American sugar market. Happy to welcome back Chairman Don Hill. Welcome back, Don.
Thanks, Anna. Nice to see you again.
So given that sugar is such an old and traditional industry, talk about how Sucro finds opportunities to innovate and differentiate itself from the competition out there.
Yeah, I think where I point to is really on our the new refineries we've built, and how we've added differentiation through the low capex, low spend refineries. I mean, we're building our new refineries for maybe 10, 15% of the cost of what the major refineries have built. And that gives us significant opportunity to differentiate. It allows us to go into different parts of the country, both, primarily in the US that have never had refineries like in Lackawanna, New York, and, an upcoming new refinery in Chicago, Illinois. And really, it allows us to not only build these refineries for less, but then offer customers opportunities they haven't had before. Again, whether it's lower logistics costs through where we are geographically in the country, or even how we offer a product offering that's less refined, higher color, granular sugar, which is unique in the marketplace. So again, lots of different areas where we can differentiate, and frankly, not being encumbered by the older traditional model has really made a big difference for us.
And tell us the size of Sucro and how it's possible for a company of your size to be adding more refining capacity than the rest of the North American sugar industry combined.
Yeah, this is a key kind of part of our business model where the fact that we do build our own refineries, we build them for less, and we move extremely quickly. So I think obviously if you think about it, if you're spending less per refinery, it certainly gives you the opportunity to build out more of the refineries. And that's, the slide I have up there, we show we've got 3 active projects. We've got a project in Lackawanna, New York, where we're kind of opened it last year. We're commissioning it now. And then the 2 new refineries in Hamilton, Ontario, and University Park, or just outside Chicago. The fact that we can move so quickly and spend for less really allows us to move into these markets quickly. And if you look at, if you think about it in the Canadian market, there's some traditional market players that have operated there for many years and are operating out of really old refineries. And, but again, if you're going to build a refinery that's going to cost $500 million to maybe upwards of $1 billion, that's a big decision. It takes you a long time to, focus on that and get that decision done. So in our case, we build it for so much less that it allows us to move faster. And so, basically we've leapfrogged the market. We've announced that we're building a new refinery in Hamilton, Ontario. It'll be the biggest refinery eventually, not day one, but eventually it'll become the biggest refinery in Canada. And, we were able to make that decision and move faster because of how we execute. And I think that's a tremendous advantage and explanation in terms of just, how we can build when other refineries can't. And then if you look at on the US side, because our refineries are smaller, again, allows us to build quicker. We build it for less. And also because they're smaller, we can spread out a bit more, right? We're not relying on building a refinery in just one single part of the country and hoping that there's enough business there to justify it. We can actually spread things out. So now we're in 2 major markets. We're in upstate New York and in the Chicago, Illinois market, or will be in a couple of years. And it just allows us to kind of serve more markets, which again, it makes our decision process so much easier and faster compared to our competition.
So with all this expansion, how does Sucro deliver significantly better earnings every year despite managing all of these active construction projects?
Yeah, so it's kind of deceptively or beguilingly elegant in terms of how much how consistent those earnings growth are. But I can tell you, It is not easy. And I think that the benefit is these numbers are kind of on an annual basis. And I think if you stop and think about the fact that with all the refinery projects we have underway, and remember, like this has never been done before in the North American sugar industry. So this is certainly not something that happens very very often. Never before has anyone tried to do this. And managing 3 projects at the same time while still delivering this type of earnings growth is an absolute challenge. It's certainly a testament to the quality of the management team, where they've been able to focus not only on the executional growth and obviously maintaining that level of profitability, but also moving these construction and expansion projects forward is obviously a significant balancing act, and again testament to their abilities. But again, I want to highlight that this is not an easy endeavor, and I think the benefit of the annualized numbers is it does tend to hide some of the short-term challenges. And as you can imagine, when you've got this much activity going on, when you get down from annual to quarterly to monthly, the shorter the time frame, more of the challenges are highlighted. And certainly, I think the investment opportunity is compelling for anyone looking at this kind of opportunity. I mean, I think the results kind of speak for themselves. But again, this is not the kind of business with this type of growth, building, and expansion where you're going to have consistent and entirely predictable quarterly results. So again, I would just focus people on being kind of patient on the quarterly numbers and focus on the annual trends, which, as we see here, are pretty good.
And so talk a little bit about why other sugar companies are not growing their refining capacity and output like Sucro. What's your growth estimate for the next couple of years?
Yeah, so this is, we've shared our model, and this includes the 3 refineries that we have coming on stream over the next few years. And as you can see, we've grown from kind of 0 up to that 160,000 tons over the last couple of years. And we have an aspirational target to get to 1 million tons. The total capacity that we think we're going to have by the end of the decade is probably going to be closer to 1.7 million tons. But within that overall capacity, we are relying on and counting on achieving sales and production of 1 million tons. And there's a lot that goes into that. As I said before, it's a business that there's a lot of moving targets, but we have the ability to rely on 3 refineries. So one of them is already close to being finished in Lackawanna. We've got the 2 new refineries. And again, it's our ability to have multiple refineries. So we're not just stuck in one market. We've got multiple markets that we are working in. It gives us access to, a variety of different customers. And even within the similar customers, we've got multiple plants that we can service. So, it is a way to spread our business out and not get stuck or relying on any just, one particular area. But the fact that we've got 3 refineries, it also brings in various synergies and logistics. We're able to minimize our logistics costs. We're able to minimize the costs of our raw storage. We have synergies in terms of how we handle our feedstock logistics. So there's a lot of benefits that go into this, and it's an advantage that we have over the competition.
And talk about some of the large multinational food companies you're working with and why they're choosing to work with you. What is it specifically that Sucro provides that they seemingly can't receive from the other larger sugar refiners out there?
Yeah, so just as a kind of a reminder on that, so we do deal with, most of the large sugar-using food manufacturers. I know this slide says 10 out of 20. But in fact, it's probably more like 10 out of 12 or 10 out of 15 when you factor in, you take away the alcohol companies and maybe the meat companies. We deal with virtually all of those largest sugar-using food manufacturers. And I think a lot of it's not just the size, but it's the alignment. and I'll pull up another slide, I think, that just highlights, some of the advantages we bring. That, and it's almost intentionally a busy slide, but this just highlights that for a company as small as Sucro is, we have more what we refer to as trade flow across the Americas than really any other sugar company in North America. And the key for that is that we're able to, whether it's raw sugar, refined sugar, organic sugar, whether it's Canada, US, or Mexico, we can work with these large multinational customers and deliver them the kind of solutions that they're looking for. We're not restricted to just one country. And again, it's, when you're a large food manufacturer like Nestle or Mondelez or Ferrero, and those are companies that we deal with in each of the NAFTA countries, whether it's Canada, US, or Mexico, and they rely on us to come up with creative solutions for some of their supply chain challenges. It's a good reason why we're active with them in Mexico, even though we don't even have a refinery in Mexico. It's the ability that we have between our wholesale distribution platform and our refineries that's unique in the industry. And when you combine that with other aspects of the business, it just gives us an opportunity to offer our customers unique solutions. And it's important that when you're these large multinational food customers, they're looking for innovation. They're looking for opportunities to come to them with interesting solutions, cost reduction opportunities. And, going back to kind of our model in our refineries, because we spend less capital on the refineries and because we are able to charge less for the sugar to our customers, that's a value-added opportunity for them. And on top of that, we can offer them less refined, slightly higher color sugar. We are the only refiner in North America, or certainly in Canada and the US, that offers these customers the slightly higher color granular sugar, and we can offer them at a discount. So, we work with each of these customers with these value-added cost reduction opportunities. So, that makes us very well aligned. And obviously, the more value that we can add to the customers, the more, they bring us along in terms of their supply chain. So, it also goes back to the last question on the growth, that when you're as successful as we've been with these large multinational food companies, it makes it easier to grow the business out. So when we add these new refineries and move into different parts of the country, we already have a head start because we've got, our loyal customers are already, making these opportunities available to us to supply some of their larger plants in different regions that we're not currently supplying. So, it's a virtuous cycle in terms of working with these customers, and it's a big factor why we're differentiated with them and why they continue to support us to the degree they have.
Wonderful. Well, Don, thank you so much for this update. We look forward to seeing you again in the near future.
Great. Thanks a lot, Anna. Appreciate it.
All right. Thanks, everyone, for watching. We'll be right back.